on Business Incorporated today. African leaders meet President Zelensky in Kyiv. And Zimbabwe Mercantile Exchange to commence agri-commodities export. Cameroon is set to put up a state company to develop and manage its country's rail sector. Good afternoon. Thank God it's Friday and it's time for Business Incorporated. It's the final one for the week. I'm Ini John Mekwa. Well, let's start off with the markets, as we usually do. We're starting from Africa now, where we see that the lone loser at intraday on the continent is the NGX of Nigeria. It's down 0.12%, still on the 59,000, though 59,125. South Africa is gaining 0.56% at 73,035.31. They've lost some there, and normally you would see the index at about 78,000. But let's look at other parts now on the continent. In Egypt, the EGX 30 is closed for the week, closes on Thursday, but it closed on a positive note marginally, though 0.05%, 17,881.5 to Kenya, closed on Thursday, negative, I beg your pardon, 0.97%, almost 1% in the red, and getting really close to the edge of losing that 100 index point that it's been sustaining for a bit. We move over to the Middle East now and see what the major market they are doing. As we would know by now, two of those markets are closed. They close on Thursday and they do not trade on Friday. But trading at intraday is Abu Dhabi positive 0.35% at 9,418.0 for Dubai. Also almost 2% looking good at 1.77% at 3,800.20. Now the two markets are not trading today. Saudi Arabia and Qatar closed on Thursday in the red, 0.15% for Saudi Arabia and Qatar, 0.20%. Let's leave the markets now a bit and head to Europe, where German industrial giant Siemens has announced a major expansion. The company is investing €2 billion in new factories, so some of them will be in China. Wonder why? Well, let's have Lars Holter now join us to give us the details. Hi, Lars. Good afternoon. So this announcement came as a surprise, especially when we mentioned China. What else do we know about this?
Yes, thanks for having me. Indeed, at least the timing of this announcement is really strange. Just 2 days ago, the German government introduced its national security strategy, which of course talks a lot about current problems with Russia, but also with China. And Berlin says that China's economic policy is threatening regional and international stability. Also, as we have heard a lot in recent months, many EU countries are discussing how to be less dependent on China in future years. Initially talking about a decoupling process and then moving more towards a de-risking strategy where we should keep China as a close partner but not depend on that one country as a supplier or customer too much. Now, Siemens is growing its business in China. 140 million euro will be put into expanding a plant in Chengdu, and a new research and development center is set to be planned and built in Shenzhen in the eastern part of the country.
So can we say, Lars, that this investment kind of contradicts Germany's broader strategy?
Because that is the world's biggest and most important market in the long run, and that's just a fact. So it seems that they're focusing more on the de-risking while keeping China as a partner. Siemens says that the Chinese plants are expected to produce mostly for the Chinese market, and they're also putting a lot of money in other places. Most interestingly, Singapore. 200 million will be invested into a high-tech factory there, and that's supposed to supply the entire Southeastern Asian market. Another 800 million will be invested in the US and Europe, all of it, by the way, for the company to focus on innovation, especially on motion control systems and digitalization.
So apart from all of this, what else do we know is going on the mind of investors?
Well, investors are still working out the interest rate decisions of the past few days. After the US Fed left interest rates unchanged on Monday, the ECB actually raised them further yesterday by a quarter point to now 4.0%. That's because of still ongoing inflationary trends. Inflation has come down for sure, but it's still too high compared to the ECB's goal. And that's why rates have not only been raised to what is now the highest level in 15 years, but listening to the ECB statement, it was likely not the last hike. More is to be expected in coming months.
All right, thank you so much, Lars, for that. Let's stay with the markets now, but let's look back at the NGX in Nigeria. Thank you, Lars. Do have a great weekend. So we have joining us now Joshua Joseph, equity trader, CSL Securities, joins us now to give us a live feed or live feeling from the floor of the NGX. Hi, Joshua. Good afternoon.
Good afternoon. Thank you for having me.
Yeah, good to have you. So we see as intraday, the NGX is the only one trading negative, and this is a market that was booming. The bull drive, is it over? The bull run? Are we back to reality now?
So basically, what we are seeing in the market is just profit takers coming in to take profit. We saw most investors coming at low prices. And the bulls we've experienced in recent times was very attractive to them. So it's just a way of them taking profits and exiting at their position at this time. So it's not basically, and I don't forget with saying that the major drivers at this point in time have been locals. And I've been seeing that they've gotten enough gains for them. So banking names, those are entered as low as 28 for GT, some entered at around 22 levels, and them seeing GT at around 30. It's a good one. It's a good return for them. So it's just about investors taking profits and exiting their positions.
Yeah, so we know that, that boom came as a reaction to the unification of the rates or the floating of the rates. More like it. So are we seeing the market now adjusting to the new reality, and so we don't expect any more, positive or negative move?
Yeah, so what investors have been looking at since the news about unification, it's just about the expectation that this will bring in foreign investors into the market largely. Recently, we've been seeing the market being driven by domestic. So the domestic players are taking position in anticipation that the unification of the exchange rate will be a positive one for the market, which will also drive FPIs into the market, and it will see a good turnaround in the market. So it's just about them taking position, and it's not about coming back to reality. What we did see is that, like I mentioned earlier on, profit takers are being the one driving it in the past 2 days, yesterday and today at large. And we still expect the bullish momentum to return next week in anticipation for every other politics that come into the market with time.
So do you see this profit taking overwhelming the market? Do we close in the red today? You see that?
As it stands, the market is currently down 49 basis points, which will happen that the market will be closing negative today. However, on a week-on-week basis, the market is still about 5.34% off. So on a weekly basis, we still expect the market to close positive. Today's activities will be on a negative note.
All right, thank you so much for that, Joshua Joseph, equity trader, CSL Securities.
Thank you very much for having me.
All right, let's move to Asia-Pacific markets now, where we see that the high on Friday, time difference, this market is closed at this time, as the Bank of Japan again left its benchmark interest rate unchanged at 0.1%. In Japan, stocks reversed earlier losses to end the day higher with, let's look at the numbers now, the Nikkei 225 higher, 0.66%, at 33,000. 3,706.08. Shanghai Composite in the same range, 0.63%, almost 3,227 to 3,273.33. The Hang Seng Index takes it even further, more than 1% in the green. Kospi, 0.66%, and in Australia, it's 1.06% in the green. In the United States, stock features inch higher earlier today as Wall Street closes out a huge week after investors got the pause in rate hikes from the Federal Reserve. They were hoping for an encouraging inflation data. S&P 500 features rose about 0.1%. Features tied to the Dow Jones Industrial Average were flat, while NASDAQ 100 features added 0.3%. Let's see how yesterday closed out with our correspondent in Washington, Maria Bird.
The U.S. stock market rallied on Thursday despite a muted opening and a hawkish hold on Wednesday by the Federal Reserve. The Dow Jones still was up by 1.2%. The S&P 500 up by 1.2% as well, and the heavy tech NASDAQ up by 1.1%. Many investors were not excited about the news from the Federal Reserve Bank, which did not show interest rate hikes on Wednesday, but is expected that before the end of 2023, there will be more interest rate hikes. This puts out the option of potentially seeing interest rate decreases and cuts in the year of 2023. Many investors were also happy to see that retail sales were up, which shows a stronger economy, but it still leaves many questions unanswered for the U.S. stock market.
Thank you so much, Maria. Let's go to the oil space now. Oil prices slipped on Friday as a weaker economic outlook and the prospect of further interest rate hikes dodged a sentiment, outweighing a tighter market in the second half of the year owing to higher Chinese demand and OPEC Plus supply cuts. The Bank of England is set to raise interest rates by 0.25 percentage point next week. The European Central Bank lifted rates to a 22-year high on Thursday, and the U.S. Federal Reserve signaled at least 0.5 percentage point increase by year end. Brent crude fell 52 cents to $75.15 a barrel, while U.S. West Texas Intermediate crude slipped 61 cents to $70.01. Rising interest rates could slow economic growth and reduce oil demand. However, both oil benchmarks were heading for a small weekly gain after declines in the past 2 weeks. Oil gained about 3% on Thursday on hopes of increasing Chinese demand. Chinese refinery throughput rose in May to its second highest total on record, and Kuwait Petroleum Corporation Chief Executive Officer expects Chinese demand to keep climbing during the second half of the year. In the metals market now, gold prices changed course to trade higher on Friday, although expectations of higher for longer interest rate hikes in the United States by the Federal Reserve capped further upside. Spot gold rose 0.3% to $1,964.09 per ounce. U.S. gold futures edged 0.3% higher to $1,976.70 per ounce. While gold is considered a safe haven during economic uncertainties, higher interest rates dull the appeal for zero-yield bullion. Traders are now pricing in a 72% chance of a 25 basis points rate hike in July after the Fed signaled in new projections that borrowing costs might still need to rise by as much as 0.5 percentage point by the end of the year. The dollar index held close to a one-month low, making gold less expensive for overseas buyers. Let's take a break now. When we come back on the other side of Business Incorporated, we do have a lot of African stories just for you. Stay with us. It's the other side of Business Incorporated, so let's get right to those African stories. We'll begin with African leaders that are meeting in Kyiv, the capital of Ukraine, where presidents of Comoros, South Africa, Zambia, Senegal, are meeting today in Kyiv, having boarded a special train from Poland on Thursday evening. The heads of state, Cyril Ramaphosa of South Africa, Senegal's Macky Sall, Zambia's Hakainde, and President of the Union of Comoros, Azali Assoumani, who is also the current chairperson of African Union, are also expected to travel to the town of Bucha, devastated by Russian attacks against civilians. Bilateral talks are on the agenda for Friday afternoon, followed by an official ceremony with Ukraine's president and a press conference. The delegation was set to travel to St. Petersburg later today to meet with Russia's top international economic conference taking place and meet with President Vladimir Putin tomorrow, Saturday. The initiative is set up by French businessman Jean-Yves Olivier, who heads the non-profit Brazzaville Foundation. And all of this is to broker for peace in the region, as well as discuss the grain deal, which affects African countries. Cameroon plans to set up a state company that will manage and expand its railway infrastructure project that falls under a draft bill that was presented to the Cameroonian Parliament on June the 13th of 2023. According to government sources, the reform stems from recommendations made after the audit of the Eseka train accident that killed nearly 80 people in October 2016. Through the new regulatory framework, the government wants to address the railway sector's shortcomings. According to the draft bill, these shortcomings include the continuous degradation of infrastructure, a drastic regression in the number of passengers from 1.4 million in 2010 to 600,000 in 2021, and at 1.6 million in 2021 against 1.9 million in 2010. The closure of the Mbaga Kumba and the Ngomu Mbamayo routes, the investment deficits and the degradation of service quality, the weakness of state control and sanction instruments in the sector, which is making it lose its competitiveness every day. In Zimbabwe now, see what's happening there. Zimbabwe's Agriculture Commodities Exchange says it will commence auctioning of approved commodities on the 21st of June, which is expected to broaden the market. According to ZMX, the weekly auction will be conducted online every Wednesday in accordance with the ZMX trading rules. And according to the exchange, the auction comes as an addition to existing normal trading where orders are posted and matched continuously. To Kenya now, where the President, William Ruto, intends ramping up government spending on initiatives ranging from increasing access to affordable housing and healthcare to support for farmers and small businesses, and expect taxpayers to foot the bill. The National Treasury has submitted legislation to Parliament that proposes doubling the value-added tax rate on fuel to 16% and imposing new taxes on digital media content and the transfer of virtual assets. The maximum pay-as-you-earn income tax rate will also be increased to 35% from what it is currently, which is 30%. Zambia's creditors are close to agreeing to a long-awaited debt restructuring deal that will allow the International Monetary Fund to disburse $188 million to the distressed African nation. According to those in the meeting, they said they've had initial agreements to provide financing assurance so the IMF can proceed with providing financing with Zambia. And this is according to Mr. Bebe Selassie, the fund's director of the African department. He said this after a meeting, one of the meetings that they had. And also on the same matter, we can say that the country is expected to use this to impact life and also to settle on the issue of restructuring its debts. We go to Egypt now, where Egypt's House of Representatives has approved a draft law submitted by the government to amend previous laws related to the establishment of banks. The draft law aims to control and regulate the legal rules that govern banks and improve the performance of state-owned banks to serve the Egyptian economy. The draft law abolished some of the laws regulating the work of these banks so that they are subject to the general rules stipulated in the Central Bank of Egypt's law. The draft law aims to unify the legal system to which all banks operate in Egypt. It also aims to achieve equality among all banks so that they all operate without discrimination. Treatment under the umbrella of the general rules regulating banks operating in Egypt and stipulated in the Central Bank and Banking System Law promulgated by Law 194 of 2020. Let's go to South Africa now, where the 80s-20s latest credit stress report shows that South Africa's middle class may be broke, but rising interest rates, a weakening rand, and the impact of load shedding is affecting the wealthiest 5% of the population. The report shows that loans newly in default were up 17% in the first quarter. It says this is being driven by a 27% jump in overall new home loans default and a 12% increase in default of vehicle finance account. It says this is a clear sign that even the wealthiest customer segment are feeling the pain. That's it on Business Incorporated for today and the week. Thank you so much for being a part of this journey. It starts again next week. But do remember, you can watch Business Morning, Business Incorporated on our YouTube channel. So please watch it as long and as many times as you want. I'm John Mekwa. You'll be having Ladi Williams join you tomorrow, 7 p.m. during Capital Markets. Until then, do have a great day.